Welcome to the Edge Market Update for June 23rd. And we had another volatile week this week. We started the week off very strong, made new highs in this rally that we've been in since mid to late May. And then we had some risk off to end the week as funds took profits before the weekend as weather had been added back in for northern Illinois and eastern Iowa. But we did make a new recent high in this rally at almost 630, which has not been a level we've seen since last November in 2022. But we were rejected there instantly. And then yesterday and today, Thursday and Friday, we had risk off into the weekend as funds took profits and reduced risk on rain back in the forecast there. So we have good support here at 576. I would really like to see that hold if that tests next week. Now it was support, but now resistance is 598. That was a very heavily traded area back in February when we were finding our crop insurance guarantee. Our crop insurance price is 591. So would really like to get up there and maybe consolidate to build a cluster of contracts being traded, consolidate, and maybe we can bust through to retest that 630 level next week or the week after if dry weather continues. We have had tons of volume in these contracts, and so we've seen a lot of widespread action in price, and we've seen some historical technical indicator readings. The strength indicators here were so overbought and overextended levels that you really don't see very often, but maybe just a few times in every decade going back over history. Same thing with money flows. We were extremely overbought in the short term, and technically we're still overbought even after we sold off about 50 cents, 40 to 50 cents the past 2 days. We're still in an overbought position on money flows. So that is just extreme, overstretched, and you don't see that very often. And long-term momentum, we're actually way back above this neutral line here, which is positive as long as we can base here and keep things moving in the right direction. Perhaps the long-term lows could be in, but just have to see how price reacts here to weather and what the forecast does and if any rain falls in our area. So keep in mind, Monday morning or Sunday night is going to be extremely volatile depending on what happens this weekend, if we have any rainfall or if it was just kind of a failed forecast again. So keep an eye on that. Expect extreme volatility for now. Ultimately, this blue line here from the lows, that's the actual trend line from lows to now. Really don't want to see this fail next week. That would be in that 555 range. If we get below there, that would be pretty bearish, opening back up the possibility to potentially return down to these levels. But as long as 555 holds, this 576 holds, we should be able to consolidate, let these technical indicators cool off, and maybe we can run back up to at least back to 630, and above there, there's that 637 to 640 area that could test as well. Moving on to new crop soybeans, we closed the week at $13.04 per bushel. We were down 38 cents on the week. We were able to get back to our crop insurance base price at $13.76, and that was pretty much the top. Thursday and Friday, we obviously sold off quite a bit, almost about 70 cents. So a pretty extreme move there. The steep trend line is still intact, but we have good support here in that 1287 range from prior highs back in May. And we obviously broke above that, broke above 1338 resistance, made that new high. Thursday we closed back at that 1338. That was turned into support, failed there, and almost bounced off of that 1287 support level. So would really like to see this area hold next week. This trend line needs to hold. It's extremely steep. Anywhere between 1250 and 1260 fails, that puts this whole move in jeopardy. but would really like to see that 1287 level hold as support, maybe consolidate there and move back to 1340. And then hopefully we can break out above there and get back to where we were early this week, where the crop insurance base price is. Again, technical indicators are extremely overbought. We've seen some nice cooling in strength indicators the past 2 days. Same thing with money flows. Very extremely overbought, and we're just coming back under that overbought line finally after selling off 70 cents. So again, this was a historical move. You only see this just a few times a decade if you go back and study price charts and technical analysis. And then long-term momentum, we are pretty much back to a neutral to a positive reading here. So perhaps if price can stay in this $13 to $14 range, we are back in a neutral market technically at the close on Friday. Obviously, a lot of things can happen over the weekend with rain projected in the forecast. Sunday and Monday will be extremely volatile as managed money comes back into the market and decides whether to hold the long positions that they've built the past week or so, or if they need to buy more due to what is going on with the weather forecast. If it comes in dry, easily could see us retest that high that was made this week at 1378. So again, keep expecting extreme price volatility. If you have any questions on your insurance policies, on how those work, or the basics of the revenue protection plan, please reach out. Would love to run through different scenarios to help you understand what kind of coverage you have. We have really good revenue guarantees, and so that does give you some confidence as a grower, as it's very hard to forward market your grain in these types of scenarios because you really don't know what's out there. So, but we will continue to see what happens. It's all strictly based on weather the next couple of weeks until we have the big July crop report, that we will get an updated estimate on corn and soybean acres planted for 2023, and then also updated supply and demand for our exports, which are not very good so far. So, but with that, if you have any questions, please reach out to our office. Thank you for watching, and have a great weekend.